Hello students, this is Professor Anita Ram Rakhiani, Assistant Professor from Management Department at Institute of Management Studies, Ghaziabad, University Courses Campus. My today's topic, the word is very small. It shows the accounting. But when it comes to the results, it is the basis of all the economic activities, whether we talk about a small institute or we talk about an economy, or when we talk about the economies of this world, they are based on accounting. In short, they are based on data. And when we say data, this data compilation or this data, the information which we get is from data, and this data is done through accounting. So in this lecture, I will be just giving you a brief of all the academic analytics, all the academic details of accounting. If you talk about the definition of accounting given by American Institute of Certified Public Accountants, it is the art of recording, classifying and summarizing in a significant manner, and we only jot down the monetary transactions into this. We note down all the events which are done in terms of monetary, which become the part of financial information. They are having the characteristics of finance, and through them the interpretation of the results is done. And this is what this is what every organization is following. If you talk about the branches of accounting, the accounting is actually internal and external. When we say internal, we have management accounting, and when we talk about the financial information, it is actually the external information, the information of an organization given to the world. The subset of management accounting is cost accounting. So in short, if I say that is there something where internal organizations are creating papers for themselves, then answer is yes. They create papers for themselves because they have to go for their decision making, and when the decision making comes up, they prepare two papers. It can be cost accounting if it is a manufacturing concern, and if it is a normal concern, then obviously they have to prepare management accounting, which both of them, any of the organization is preparing. But when we have to float the information to the outside world, because from the outside world, in my outside world, customer is sitting, my supplier is sitting, my vendor is sitting. So for them, we prepare another, papers, and those papers are in the form of financial statements. When I say financial statements, it is majorly, there are two papers which are circulated to the public, and those papers are trading and profit and loss account and balance sheet. Let me talk about the features of this accounting. How does this accounting look like? So accounting is all about recording of business transaction. Then these recording is done in a book named as journal. From the journal, we go for the posting of these transactions into individual books, and these individual books are known as ledgers, which means to say that suppose I have an account where I started my business with cash. So the transaction goes like cash account is debited and capital account is credited. So it means that I have to open two different books. One is cash and another one is capital book. So these two different books are basically the ledger accounting. So we start the journey with recording, we go to classifying, and then all these events are recorded in the form of transactions. And the most important part, once again, these are the monetary transactions only, which are recorded in these books. After once the recording and classifying is done, we go for the summarizing of these financial transactions. This accounting is actually an art of summarizing it. Again, accounting is also an art of analyzing and interpreting these transactions, which may vary from organization to organization. The data remains the same, but the beauty of this accounting is the interpretation and the analysis of that data. And now what the organization do with that data, they actually communicate these analysis to themselves and to the world for all the decision making. It can be a decision making by the organization itself, or it can be the decision of the people who want to invest in the company. Next is the objective of accounting. Why we are preparing accounting? It's very clear from the brief of the accounting is that we have to ascertain whether the business operations are to be profitable or not. We also want to find out the financial position of the business. And why we want to know the financial position? There are two reasons. First, I want to take some decision, and I want others also to take some decisions about the company, so that we can get funders for the organization, so that the organization can get the market. So for that particular reason, we prepare accounting, and to generate whole lots of information. Sometimes it is recorded, we have kept it out so that we can take the next year's decision. We have to go for some decision making. Based on these information only, we can go for decision making. The next most important part is the functions of accounting. What accounting does. It is a systematic record of business transactions where I can protect the property of mine. I can safeguard the property. There is a term which is used in accounting is mortgage. So what is exactly the mortgage? Mortgage is nothing but actually I'm safeguarding the investors in the business. If an investor thinks that, tomorrow if something goes wrong with the organization, will my money be returned back by the organization? There this mortgage is used. So through this accounting, through this data, the information is circulated to the people that it's not only the liquid money on which the business is based. Business is also having certain mortgage where if nothing is left with the business, then these mortgage properties will be sold out, and then it will be returned back to the creditors of the company. So another function of accounting is communicating results to the interested parties. These interested parties can be customers, it can be the employees also, it can be the directors also, it can be managers of the organization, it can be vendors also. So if we talk about internal people who are connected with the organization, these as well as the people who are indirectly associated with the organization, two of them wants to get all the information, and these are the interested parties, and accounting is actually fulfilling the needs of these parties. And then most important, the compliance with the regular requirements. We are working under the umbrella of the government, so we have to fulfill certain formalities of this government also, and their government also demands these papers only. So these papers are done through accounting. This is the list of the accounting information, who all are using this accounting data, the accounting information. Few are there who prepare the data, and few are there who are using the information prepared from that data, the interpretation done through that data. So the users can be the owners, the creditors, the investors who have invested in the company, or the one who are planning to invest in the company. Both are the investors, and then employees, the government, where I have to go for external auditing of the papers. We go for internal auditing also, where an internal auditor of the organization does all the paper checking, and then the scrutiny of that is also done by the government, and then only they give you a status of continuing with your business, else they can take a call. So it is all based on accounting. Public is there who is using this accounting papers, accounting data, accounting information. There are certain degrees based on which students are taking their higher education. In research, we have to have the data. Unless and until you have the data, you cannot go for your completion of the research work, because research work needs some secondary data. The researches are based on primary as well as secondary data. So the story starts from the secondary and it lands up with primary data. So the secondary data is there on the websites of the company, in the journals of the company, into the magazines of the company, sometimes in the newspapers of the the newspaper informations of the company. So research scholars also need this information, and most important, the managers, because they have to take certain decisions. What about the advantages of this accounting? Whole lot of process which we are doing, right from making of journal to ledger to trading account, profit and loss account, balance sheet. The advantages are that I need not to memorize anything. Everything is there in the papers. Papers speaks everything. Based on this paper, I take all the decisions. So it is actually an alternate to my memory, and actually more authenticated one, because it's handwritten, it's black and white. Now it is there on the systems, so I can store, and then it is evidence for the court also. Tomorrow if some grievance comes up, then again it's an answer, because I have everything in black and white, and I've stored it also, because all the stamp papers of the auditors is also there. So if I want to show my last year's papers also, it's authenticated. So the government has to believe into that. And then it is used for the settlement of taxation liability. I can compare the data. I can not only compare myself, but I can compare my data with some other company also into the same industry. There you can take the right decisions. For that also you need some data. If a business goes for some sale or auctions, again, people, we say that the bidding starts with the very first, initiation, that the transaction or that figure comes up from the data only. So when it comes to that, again, data speaks, again, accounting speaks over there. It is an assistant to an insolvent person who has declared himself to be an insolvent. Again, you want a proof to that. Accounting is an answer to that. And then it assists various parties. That is, those parties which are indirectly or directly associated with the business. They need some information. They need the data. They need the raw, informations, raw papers, authenticated papers. If something is good, the coin has the other side also, and that is disadvantage. When it comes to disadvantage of accounting, as it was, as the session of mine starts, I focused on the word monetary. So it just records the monetary transactions. All the non-monetary transactions are just ignored in accounting. It affects the price level. Price level is something which is very continuous, but we record all the transactions in history. Historical cost is recorded in accounting. So this is another limitations to this accounting. So because historical cost is there, so the information, it may happen, it's not realistic. If we compare with the last year, then it may happen. And then because it is an art of recording, art of analyzing, art of interpreting the transaction, so personal biasness do come of the accountant. And then it permits the alternate treatments, because biasness is there. So obviously you are giving an alternate to those transactions. You are giving another perceptions to those data, another analysis to that particular data. So profit is to the profit which it shows may it happen that it is not that real, that map ups with the current market prices. So these are the limitations of the accounting. With this, we have ended up with the theoretical part of accounting. Thank you very much.